I'm Charlotte McLeod with investingnews.com, and here today with me is Rich Checkan, President and CEO at Asset Strategies International. Great to have you here. Thank you for coming.
Great to be back, Charlotte, always.
Really good to be talking to you, and of course, you have had such a busy day, so thank you for coming by. We are catching up on our conversation from all the way back in November, so oh my goodness, a lot has happened.
I remember what I said back then.
Yeah,
You'll remind me, though.
We will. So I will start with one of the final sentiments that you left us with, which was that gold was still cheap and silver was even cheaper. So silver, I think, definitely still cheap. How are you feeling about gold?
Same exact statement. So for about 3-4 years now, I've been saying that gold at all-time highs is dirt cheap. Silver is even cheaper, well below all-time highs for silver. And the reason I said that 3 years ago, 2 years ago, last year, and now is the Western investor still not in this marketplace. And when they get in, so European investors, North Americans, when we get in this market and start buying, not selling like we are right now, we start buying, it's going to make a huge impact on the price. And they're not in it. I've got a couple indicators that dictate to me that we are not seeing investment buying right now.
Well, tell me more about that. I'm sure we've spoken about the Western investor side, but yeah, tell me what you're seeing there.
Yeah, so two things jump out at me. The first thing is I look at the gold-silver ratio, right? So number of ounces of silver it takes to buy 1 ounce of gold. That number has been elevated for a long time. It used to be that 80 was the magic number. If it was over 80, it suggested that gold and silver were both dirt cheap and ready to rise in a fledgling bull market. That number's been as high as 127. It's been between 90 and 100 for a year or two, maybe even. And I think this morning it started at it got down to about 90, which is still 10 points above the big number that we should be looking for. So you got to ask yourself, why is that? And it just points to who's doing the buying. Central banks, well documented, bought over 1,000 metric tons each of the past few years. They're on pace to do it again. Okay, so they are absolutely doing the buying. What they don't buy is mining stocks, and they don't buy silver. So unless they're buying silver, that number's not coming down because the Western investor is not. When the Western investor moves into the marketplace, they'll buy gold and silver. Silver is a smaller capitalized market, and that number will move up quicker than the gold price, and that ratio, gold-silver ratio, will come down. So when you see the GSR come down below 80 and continue to fall, that's your indicator that the Western investor is finally getting energized. The second thing I look at is premiums. It's just plain and simple. When everybody wants something, does the price go up or down? Absolutely goes up. It's economics 101, right? So right now, we're seeing the lowest premium, Charlotte, that I've seen in 30 years, okay? Take you back to August 2015. I don't know if it was Grexit or Brexit. It was one of the exits, and that was going on. The Chinese stock market fell precipitously. The Dow fell right behind it. And at that time, for all those reasons, everybody was clamoring to buy silver. The premiums on pre-1965 U.S. coinage, so junk silver, 90% silver, was 60%, 60. 1.6, whatever the price was, is what you paid to get some junk silver. The terms were horrible. Pay me via wire within 2 days, and I will deliver it sometime. I have no idea when, but it's going to be at least 2 months. Okay, those are the terms that people are like, I don't care, I want it anyway. That's how bad the fury was to buy. Right before the 4th of July, Independence Day, we put a promotion out to our readers where you could buy junk silver at spot, 60% lower than back then, because I can buy it below spot. It's unheard of. It's unheard of. So bottom line is they're not in this market. When you see premiums move up, GSR come down, that's your indicator that things are going to start to get fun.
Very interesting. And of course, you're a perfect person to ask about what's going on in terms of demand. You've got boots on the ground there. Maybe we talk a little bit more about what you're seeing from your customer base. I think last time we talked, you said people were selling, not as much, and you did have buyers at least who were keen to pick up from the sellers. So are those trends still?
Nothing has changed.
Yeah.
So predominantly folks are selling. Investors, they're selling into this marketplace for about 5 different reasons. First one, anytime you see the stock market precipitously fall, we've talked about this before, it happened twice, I think, over the past year. Right away, you see gold and silver sell off too. They're selling a liquid asset to meet margin calls and leveraged accounts from the stock market pullback, and then immediately it recovers. So we're seeing selling to cover margin calls. We're seeing selling by elderly clients that are looking to simplify affairs in their estate for the heirs as they get up in age. We're seeing when elderly clients pass, we're seeing their heirs sell because they don't share the same desire for gold and silver that their parents did. They think, dad was a crazy gold bug, right? So they're selling off to get cash. We're seeing people sell to take profit. I think that's very premature and short-sighted because I think we really haven't even just got started yet. But consider you're struggling to make ends meet in the middle class. You bought at $1,500, say you're at $3,300. It's hard to talk somebody out of that when they need the money. The biggest reason we're seeing people sell is because they're trying to pay off credit card debt. And the reason I know this is we ask every client, was like, listen, to try and take care of you, I'm going to suggest that you should be buying here, not selling when they come to sell to us. And can I ask, why are you selling? And predominantly the answer is I'm paying off debt. So that's kind of scary. And I had one client at my booth say, well, maybe they're lying to you, and I'm thinking, if I was going to lie about that, I wouldn't say that I'm covering credit card debt. I was like, I want to buy a jet ski. I want to put the money in something else. But we have good clients and they're honest with us and they're just in a tough place. Middle class is struggling right now.
Really interesting to get those insights on what's going on with people. So this is talking about the West. How is demand looking in the East? I know that this has been really driven by what's going on over there. And I've been hearing, of course, there's the gold aspect, but I'm hearing about Eastern demand for platinum is one thing and also silver. So any trends there?
Yeah, there's no question that if you are seeing any retail demand, it's coming from Asia. Yeah. No two ways about it. I still think it's kind of dwarfed by the central bank demand, but the Asian demand is there, and rightfully so. I mean, their economy's struggling too. You're just having real estate issues, you're having stock market issues, et cetera. And those folks in China, et cetera, are buying commodities. So it's not unheard of. They're probably a little further along in that curve than we are right now. But we're right behind.
Right. All right. So we've got a lot to catch up on in terms of what's driving the gold price right now. You're bullish on gold, but it's been so long. So back in November, that was just after Trump was elected. Yep. And there was still optimism around about, going to cut spending, bureaucracy, maybe even reduce the debt. And now we are in quite different circumstances.
How did that all work out?
Yeah. I mean, this is my question to you. We've got Elon Musk, he's out of Doge. We've got big, beautiful bill signed into law and much more. So what is your take on that, especially the debt situation, which we know is...
Yeah, so from the start of the year, I was pretty adamant, and it may have been back to November, I think I might have said that, people are going to be in a wait-and-see attitude, right? So President Trump came in on a whole bunch of promises. We're going to cut spending, we're going to reduce the debt, and we're going to do all these things. And this is really the first test. I told people it was going to take probably a quarter or two for us to kind of get the report card in on the Trump administration and how they're doing fiscally. You can rate them on a whole bunch of different things, but I'm just looking at the fiscal responsibility, and it's not a good grade. The big, beautiful bill was meant to reduce spending. We've increased it. And I don't know what the final numbers are and who you talk to, but I want to say it's about $5 trillion increase over 10 years on top of the $2 trillion that were already baked in for each year from now until then. So that comes out to me to about a $15,000 increase. We're going to be in the mid $50 trillion range on our debt in 10 years. And that doesn't even factor in the fact that Social Security is going to be completely bone dry by 2033. Okay, so the bottom line is we are not reducing the debt. We are not balancing the budget. And until we have a Congress with a will to balance the budget, to cut spending, to do the right thing, gold's going higher. Because the only thing, Jerome Powell cannot fix that with interest rate manipulation. He cannot do it. The Congress has to do that. But we know why they won't. Right? If they don't deliver on their promises by overspending, they're not going to get reelected. Yeah. It may be a flaw in our system. We're going to see how it plays out.
The other thing that we've really seen play out since that conversation is the tariff situation. And that's tricky to talk about right now. I know there's lots of elements that are in flux, especially this week.
It's tricky if you're not a believer in free markets, but if you're a believer in free markets, it's really easy to talk about it.
Okay,
It's about
well,
Thea. So
I'll go back again to one of the things you told us about tariffs when we were early in those days about them. You told us if we got tariffs and tax cuts without the cuts in spending, this is going to be inflationary. So let's talk about your outlook for inflation.
yeah, exactly
Yeah.
what's going to happen, what's been happening. I think over the past couple months, if I'm not correct, inflation is starting to tick back up again, right? And I know we cut interest rates a little bit. Even though it didn't meet any of the criteria that the Fed said they needed to cut interest rates, they cut it a little bit just to appease the stock jockeys. But inflation has ticked up, and it's not surprising. Tariffs will have an impact. And I don't really care who you believe pays the bill. The consumer will always pay the bill. End user pays for whatever the increased bloated price is. So that's price inflation, and we already covered that. Without cuts, you have to expand the money supply to take care of the overage or the shortage. Expansion of the money supply is by definition inflation. It is the cause that leads to the effect of price inflation of everything of any value. Cup of coffee, college education, new home, gold, silver, all going to cost more.
Okay. And so
that is the path
yeah.
we're on. And so what's the impact? We are on that path. Very deeply entrenched in that path.
Yeah.
Unfortunately,
it does feel that way. And maybe we talk a little bit about the Fed and what's going to be going on. So you mentioned we got those cuts, but without the criteria that the Fed said was needed, now we are in this holding pattern. And I guess there's a little bit of a standoff there with Trump telling Powell, you've got to do it. And of course, you wouldn't want to do it if you're being told you should. So what do you see playing out there?
Well, I think eventually Jerome Powell's going to go away.
Yes.
And President Trump's going to put somebody in there that he thinks is going to do what he thinks they ought to do, which is, lower interest rates, which is going to be inflationary if we haven't tackled inflation yet. In the meantime, what happens is the world looks on this and it says, they're even more dysfunctional than I thought. Let's move more of our money out of dollars and treasuries and put it into gold and other real assets. So I don't think that's going to curtail the central bank buying. I think it might give it a little shot and a little wind in the sails, to be honest with you.
Well, yeah, and I've been thinking about this. Of course, the president can do nomination for the Fed chair.
Sure.
But I'm thinking about
he Jerome Powell.
He did. And I wonder what he's thinking about that now. I guess we have a clear idea. But then the world is looking on and maybe seeing this kind of interference, right? So you maybe talk a little bit more about what that means on the global.
It just looks bad. And you got to remember that the world has financed the standard of living that we enjoy here in America. Like it or not, the world buying our debt has propped up our standard of living. And as the world stops buying our debt, our standard of living will fall. We're already seeing that. I don't think Americans have an appreciation for how much that has been a benefit. I think they're about to find out. And that's not a threat. It's not something I'm wishing for. But the more we act dysfunctionally, the more they cannot trust that reserve currency, the more the world is going to back away from it. And I think we're seeing clear signs of that already at the Treasury window. We're seeing clear signs in terms of the allocation of strategic currency reserves in different countries.
I think, yeah, definitely these are things that we can see playing out. And all right, so these are factors that are influencing gold. We've gone over what you see coming for gold. I want to come back to silver because that's a topic that seems to be on everyone's mind here at this show.
A lot of potential there.
A lot of potential. Okay.
It's starting to show life.
Yeah.
So.
Yeah, you're talking about the gold-silver ratio, which is very elevated.
Yep.
What do you see coming for silver? This move that we've seen, is it looking real to you?
Well, I think the fundamentals for silver are incredible. I think I was talking with someone else earlier today. If I have this wrong, I'm not far off. There were about 11 straight years of surplus production of silver. And then not this year, but The previous two were deficit production, and those 2 years alone wiped out the 11 years of surplus. All right, so it was gone. And to the point now where I believe we are in an above ground deficit for silver, and we haven't even factored in all the new uses, the increased solar panel, consumption and this, that, and the other. So, and, silver is inelastic. For the most part, there aren't a lot of pure silver plays. If you want silver, you can't just start mining more silver. You need something else more instead that silver comes out as a byproduct of. So the bottom line, you can't push a button and then all of a sudden get more silver to fill the void. So I think those price pressures are going to be positive on the silver price. I think we will see the Western investor get in this marketplace. And again, when they buy both, smaller capitalized silver market will have a bigger price impact from the Western investor, and we'll see that number come down as the prices rise. We talked last time, I think, about that 45-year cup and handle formation for silver. And again, I'm not a technician, but I am told that that big, long, bullish formation that we broke out of suggests that we're going to see $90 to $100 silver. And I think that is very real. Somebody told me they didn't think that was real, that's way too far. Of course, I've had other people say that that's not even far enough. You get everybody in all over the spectrum. But I look at the rally from 71 to 80, okay, and I kind of discount it. Yeah, we hit $50 an ounce, but we had oil sheiks and Hunt brothers pushing up the price, trying to commandeer the market. So the bottom line is that's kind of fake news, if you will. In 2001 to 2011, I think that was driven by real market forces. And I think that $50 value was real. And we're moving towards that now. We're only about $13 away as we speak. And I think 90 to 100 is absolutely reachable in the life of this bull market. I think that's where we're going. So I still absolutely love gold as wealth insurance. The premium for your policy is incredibly low right now. Dirt cheap, right? And for profit potential, I really don't see anything better than silver right now.
Okay, very clear on the thoughts for silver. And just at this event here, there's lots of investors who are on the show floor. Questions that I hear people asking right now when it comes to physical gold and silver, people want to know, okay, what products should I buy? Where's the best value right now? Is there anything you'd share there?
Yeah, just because of the capabilities that we offer, I still think, when it comes to gold and silver, you start taking physical delivery. If it's going to be a liquid asset for a financial crisis that you hope you never have, and a store purchasing power, you have to be able to put your hands on it immediately, which means you take delivery. So I would buy coins, bars, rounds, whatever it was that had the lowest premium. The goal here is to take as few dollars as necessary to meet your allocation for gold and silver. And that means the lowest premiums, and we can help you do that. It changes from day to day. But as you call up and say, hey, I need this, we'll look and tell you at that point what's got the lowest premiums, and that's what you should go into. It's going to be liquid no matter what. I do have people still come up to me and say, sovereign coins are so much more liquid than bars. And you've heard me say this before. 30 years in the business, I've never had a problem buying or selling a bar. Okay, so seems pretty damn liquid to me. I'd go with whatever had the lowest premium. Outside of what you take delivery of, and now you want to start putting it in the hands of third-party depositories, and that threshold comes when you either have enough close at hand to bridge any short-term needs to get to assets elsewhere, right? So you can tap in and meet that criteria, or you don't want to have any more than you feel comfortable safeguarding and storing yourself. So whenever you hit that threshold, now you want to look to a third-party depository. I'm a big fan of permanent certificates. I don't know anything safer or cheaper out there. I know everybody doesn't offer them, but I'm sorry for them. I can offer them, and there's nothing better. But the more you hold, the more you should spread it out. We have other opportunities there as well. But keep your premiums as low as possible. Permanent certificates are even cheaper than physically owning it yourself and physically storing it yourself with a lot less risk. But it's my second step because you want to take delivery first.
Very straightforward, makes a lot of sense. Thanks for going into that one. I think we've been through a lot on gold and silver. I'll send you back out onto the floor momentarily, but any final thoughts you would leave investors with? I know it's interesting times.
Yeah, again, I think nothing's changed from the last time we talked. The middle class is struggling here. I still think Jerome Powell and the Fed have it wrong. They see increased spending and they think that it's strong household finances and increased demand. It's people buying the same things they needed 3 years ago and they all just cost more. They can't tap into their ATM in their home because then they got to refinance from 3 to 8%. They've run their credit cards up to 1.2 whatever trillion dollars household credit card debt in the U.S. at 20+% interest. That's done. And now they're selling their gold and silver to meet their needs. So it's hard to find the money. My suggestion there is concentrate on your needs and not your wants. And I think your wealth insurance is a need, not a want, right? So find a way to buy it. Cut down on that nice dinner or that vacation and put it into something that's going to protect your financial future. That's one thing. Second thing, you haven't struggled putting it together. Consider pooling finances with friends, family, and buying it that way so you all have a step forward together toward wealth insurance. Look to your IRA funds, okay? A lot of people put money in their IRAs and they just forget about it. They put it in a brokerage or what have you, and they're subject to the whims of the stock market, the paper market. You can own precious metals there too. Force that allocation with long-term assets because precious metals are a long-term asset. Okay. So that's one way to find liquidity. And then don't get wrapped up about gold's at $3,300 an ounce. I can't afford it. Gold's been around for 5,000 years. What it does hasn't changed. How we get it to people has changed with technology. I mean, I've got an online service. I could sell you $50 worth of gold, not 3,000, $50 worth of gold at 1% premium. Okay, with no ongoing storage fees. Buy a little bit here and there, set up an accumulation program, ease into the market. The best time to buy gold was yesterday. The next best time is today.
Perfect words to end on. Thank you very much. This was great.
No problem. Thank you for having me as always, Charlotte. It's always a pleasure.
Of course, and I'll look forward to having you back, hopefully a little bit sooner this time. Very good.
Whenever you can.
Of course. Once again, I'm Charlotte McLeod with investingnews.com, and this is for Checkan with Asset Strategies International.